So, could a potential US CBDC have peer-to-peer transactions, or at least to some degree, right? And so, according to a new kind of White House paper from the Office of Science and Technology, kind of looking at the cost benefits of pretty much any design choice you could have for such a central bank digital currency, this actually was brought up to where it may or may not have peer-to-peer transaction like capability, right? And there's actually some pros and cons to this. And so basically what we're going to do in this video is look at the kind of pros and cons of having less intermediation for such a CBDC, right? So intermediation being basically like you have the currency system or the CBDC system, and then you also have like banks, payment services, kind of more of a private sector come in here and help, right? Intermediate, help with the system and basically connect it to the actual users themselves, and look at kind of the pros and cons of having less of that. So one of the immediate things that comes to my mind is privacy, right? And so basically those banks, payment systems, and the private sector entities would not have your data to a certain degree, right? And again, all of this is in flux. This is kind of looking at the differences, right, for such a currency. There's so many different design choices, you really have to look at it in aggregate total, but we're just kind of trying to pick it apart piece by piece, right, to really kind of discuss it and understand the different pros and cons and such, right? And so there's that privacy aspect, especially with the intermediaries, and having, say, like Bank of America or PayPal or insert entity, could be a completely new industry, come in here and they don't have your transaction data and that sort of thing, because you could have this peer-to-peer sort of aspect for it, right? And this is something they actually bring up a few times in their papers. And so the intermediaries don't have their data. It doesn't necessarily have to be recorded. Potentially, it depends on the ledger system, which brings to a kind of con of that. If this peer-to-peer transactions, if these are on a public ledger, then they could be easy to track, which on one hand could help with the anti-money laundering and counter-financing terrorism kind of policy objectives that the White House and just in general have. And so, but it's also like other people can track it as well, right? And yes, you could have these kind of competent government entities, as they say, have access to this data, but that doesn't necessarily mean they're the only ones who can figure it out. I'm sure we can tell with cyber attacks and that sort of thing, these are a major consideration when dealing with especially a national central bank digital currency, right? And so keeping that in mind, another kind of pro of having this extra privacy in a way, if you really think about it in terms of having a peer-to-peer kind of transaction system, or at least aspect of it, because it doesn't necessarily have to be only peer-to-peer. This is there's a kind of a gradient that you could have between peer-to-peer to basically completely centralized, everything's account based, and the central bank or whatever entity has access to everything, right? You can kind of have varying degrees between those two extremes. So on the one hand, with these peer-to-peer transactions, since there is no intermediary, it can be more of like a kind of a digital cash it could be a digital cash, right? And it would function much like cash in this respect, to where it could be anonymous and basically be that kind of instant settlement in a way that cash is now, physical cash, right? And kind of already touched on for the next kind of pro and con is anti-money laundering and counter-financing terrorism. This is a major policy objective they have. It is what it is, it's government, right? That's always going to be a concern. You hear that all the time with the crypto stuff now. That's what they talk about. It is what it is. Kind of finally, one thing I want to look at is the payment system aspect of it, because this is a payment system. It would be kind of, I wouldn't necessarily say revolutionary, but innovation would be required, right? Because it's a new system, you have to innovate it, improve it, and so on, or else, again, the security aspect of it could be compromised. And we'll kind of touch more on this in future videos. This will be an entire playlist really doing a deep dive in the different aspects and design choices for a central bank digital currency, because for one, as the more I look into it, the more I'm kind of worried about it, and the more I want to kind of understand it and put it out there and also get feedback on. So that's another reason for these videos, right? That being said, in terms of improvements to the payment system, right? So peer-to-peer could have fewer costs for the intermediaries themselves, right? Because there's certain degrees that the intermediary may not be, have to be, or cannot be excluded from, we'll say. So like we could have these peer-to-peer transactions, but maybe you need some intermediary, a bank or whatever, to basically hold and help create accounts or do customer service or that sort of thing, right? Because this would be a national system and there has to be some degree of there has to be some form of regulatory guardrails, right? And that's kind of me parroting their kind of, I don't want to say narrative, but you have to keep in mind that a lot of this data and these choices will come through like the White House, the Federal Reserve, that sort of thing. These more bureaucratic entities. So you have to keep that in mind. It might not be optimal, but this is the kind of way we're looking at this, right? For a central bank digital currency. This is completely separate from kind of private currencies and that sort of thing. Private digital currencies, crypto, we're not talking about that, completely separate entity. We're talking specifically just about central bank digital currencies, right? That's how we're playing it. So keeping that in mind, another thing, or what this peer-to-peer would do, these peer-to-peer transactions would help with in terms of the intermediaries is basically keeping costs down for consumers. It could do so, right? Specifically because the intermediaries would no longer have to pay for these costs of maintaining these types of transactions necessarily, right? Or at least those costs would be significantly decreased. And that being said, they could probably produce more cost-efficient products and services in that respect, right? Or they can make them even more efficient because they can focus more of their time on that, right? And so what this could also do for peer-to-peer transactions is basically small retail transactions could be cheaper and be quicker processing because you don't have to deal with the back-end kind of ledger stuff for an intermediary. There's kind of a separate system for that, right? But another thing, especially in terms of the fees and stuff, because just because the intermediaries aren't paying for them, that might mean that the users themselves have to pay for them. Maybe not directly, or maybe it's kind of just using the system itself is more expensive in maybe other forms, right? Maybe it's more difficult to use. Maybe it requires a little bit more education to do so. Things like that. There's a little bit more effort needed from the users themselves. And this kind of gets and ties into different kind of design choices when you're looking at, say, a major one they push is financial inclusion. Basically, people who might not be, we'll say, technically inclined may not understand how to use it, right? And that could basically prevent them from utilizing the system that they may or may not otherwise need to, right? Keeping that in mind. And the biggest probably concept specifically for having less intermediation in such a system would be it may displace traditional financial intermediaries, right? So, because like if they're not going to be as much of a part, then if they aren't going to play such big of a role in said system, then they're not needed, right? And so maybe we see more centralization of power in that respect to maybe the Federal Reserve, some other government entity. Again, maybe completely different industry pops up to basically help create the structure for said system. It could be something along those lines, right? It's one of those, again, these design choices, you have to look at all of them as a whole to really kind of really understand the pros and cons of separate kind of structures and systems itself, right? And so starting to kind of close up, right? And so looking at these peer-to-peer transactions, right, that doesn't necessarily keep out the intermediaries, right? That isn't exclusive. Just because there's less intermediaries in the system doesn't necessarily mean that they can't be a part of there for other things like we talked about before in terms of like account creation, customer service. Those kind of things would probably be more beneficial to have them do, right? Instead of people kind of figuring it out on their own or the government trying to figure out how to do it themselves, because I'm sure like the Federal Reserve probably doesn't have a very extensive customer service desk or department or anything that could do something like this on such a scale as the entire nation. The private banking system or commercial banking system, yeah, but millions of people, probably not. So keeping that in mind, you have to kind of look at the system as a whole to see, would this peer-to-peer help with the general scheme of things? Because a major concern, one for me and from what I've noticed from a lot of people with the advent of a central bank digital currency, would be basically the authoritarian nightmare aspect of it, right? So maybe if there is this kind of peer-to-peer component, then maybe it wouldn't be such authoritarian. To what degree? But then again, it depends on how the structure of the system is itself, and how that's taken care of and how it is used in application, because it's one of those, we can talk about theory all day, but how it's actually applied is what actually matters, right? And without having like, this is the system, you can't really do that very well. At least I can't. With that being said, I kind of want to break this up, and there's another video that basically going on the pros and cons of more intermediation in the system. So maybe if we have it more, the banks, payment systems, those kind of companies, maybe they have a whole new industry pops up and they take care of most of it, and then again, maybe it is better, I don't know. But that's kind of the whole point of these videos, is to try to understand, right, and to really discuss these in depth. So that being said, I'll put a card up in the corner for that video for more intermediation, right? And to keep in mind, this is probably the first time I've ever done this in terms of like saying, like, if you guys want to listen to more and try to really participate in really picking apart and doing a deep dive in the whole central bank digital currency arguments, don't forget to subscribe, that sort of things, because it really kind of, especially because I can see which videos you guys are watching when you subscribe. So it really kind of helps me figure out where I need to focus more of my time, and also put comments and stuff below just so I can understand and tell me what you guys want more of, if you like it, and also ask questions, that sort of thing. That's the whole point, is to create this discussion. But yes, so don't forget to watch the next video. There'll be a whole playlist, everything, going more in depth, just trying to really pick apart this entire argument and understand every aspect we can about it, because this is definitely something that I'm worried about, and I'm sure, and from what I've heard, other people are as well. So I'll make sure, and I hope I see you guys in the next video.